Hi everyone, this is Michael Ben-Ghiat with the Stock Picks weekend review video for December 17th, 2022. Here's our disclaimer, you can check it out. And as usual, we're going to go into the current market environment, then review the one stock in our portfolio, and then a few stocks on our watch list. There are no stocks in the ready list, which is actually pointing to why the current market environment is so poor. So right now we're back. The stock environment indicator is red. The best strategy for quite a long time has been just very short-term swing trading, and a recommended stock exposure is 15% or less. If you have no exposure at all, that's fine too. Just really, it's just the action of leading stocks has just been terrible. As soon as we get a little bit of traction, the market just rolls over, and we're just not getting anything. Over the last few weeks, there just not very many stocks are breaking out, and we're seeing a lot more breaking down below their pivot areas, going down, 7-8%, which is our maximum stops, and a few are just going into complete base failures. And overall, there's just no stock setting up, which is really just telling you right there. We have a trend template we look at, and we're down to, I think, 141 stocks. In good times, it's over 1,000. And we're getting less and less. We were in the mid 200s just I think at the beginning of the week, and so now we're just getting less and less. What this is telling us is there's less stocks that are above their 200 days with all the moving averages aligned with a good RS. It's showing that the market's getting weaker and weaker, and that's what it is. And plus, we're getting a lot of volatility, which is not your friend. We like the one-sided volatility where the volatility is all to the upside. That's the volatility we like, though people don't usually call it volatility, you call it alpha. But we're getting it on both sides. Big days up, big days down. Very hard to make any money. So that's where we are. So let's go ahead and take a look. Let's go to our MarketSmith charts. And let's take a look at the one stock on our, let me pull up my stock picks over here. Okay, so we have our position in Model N. This is actually an interesting company. It's one of the few stocks that's a tech stock that's actually not making new lows, but making new highs. So let's go ahead and take a look at the monthly first. Let's go over here. So it was a somewhat... it was an IPO about 9 years ago. Now, this is something too. A lot of the best winners are going to come out of IPOs within the last 10 years. So this one actually is fitting the schedule. Now, it's typical fashion. The stock IPO'd, went up a little bit, and then crashed. And then formed this sort of stage one kind of period. Now, this is a monthly chart. But you can see here just a lot of chop around. Kind of went up a little bit, came up, crashed during the coronavirus crash, and just really a lot of choppy trading on a monthly chart. But we can see we're actually getting up to, we're just about making the highest close ever. Maybe we're a little bit down from this week in 2021. Let's see, 42.35. Yeah, we're just below that, but you can see 1, 2, 3, 4, 5 up months in a row. And the RS, very strong RS. So this company is turned around. Whatever it's doing in terms of earnings, sales, margins, competitive advantage, it's actually looking pretty good. So we'll go back to a daily. Actually, let's go to the weekly. Let's go over here. So you can see we've got an overall really good ratings. A 97 composite. This is adding in sales, margins, earnings, earning per share. Growth rate 103%. That's exceptional, especially for this is a pretty small company. It's just $1.5 billion market cap. That's a small cap. As you can see here, just sales over the last 8 quarters, pretty strong sales. We're starting to get some pretty decent earnings too, even though we have a couple negative here and there, but not bad. Overall, in the annual earnings, you can see just coming up slowly but surely. So really just overall pretty pretty good fundamentals, and it's being reflected now in the technicals. Here in the weekly, you can see we had some nice tight trading for 5 weeks. That's really constructive, because when you start getting up to these old highs here, if you kind of just draw a line here, you can see that's where whenever the stock would get up to those highs, it tended to get pushed down by sellers. And the fact that we had all these weeks with some really nice high volume weeks in there also, and the fact there were no sellers really to push it down, was a great sign, giving us the path of least resistance, which was up. So let's go now to the daily. So we had you can see the downtrend here. It turned around, and then why we got the stock is that we got on a small scale. This is a pretty small base, but we're still coming out of a bigger base. Is we got this contraction in volatility, which was Mark Minervini's creation, the volatility contraction pattern, or VCP. And this was on a pretty small level, but you can see here we came down, and then we came down again, and then we had this one more contraction, just actually one day. But what this was doing was showing us that whenever the stock was getting up to about 39.75 or so, previously the sellers would just push it down. But the fact that it came right back up to that price, and we're not getting any more selling, and you can actually see signs of accumulation. Look, the sellers just below average volume, and a lot of spike 1, 2, 3, 4, 5, 6, 7, 8 accumulation days going on here. That was when it finally got to make an attempt to break out again, it's actually held the breakout. Now, we actually have sold twice into this just because the pop and drop or pump and dump scheme, which we've seen all year and even going back into 2021, 2022. Sorry, into 2020. I'm going the wrong way. We've seen this for about a year and a half. It just, the breakouts just really don't last very long. So we sold into the first thing just with a small gain. We took some more profits on Friday. We'll see what happens. And we've moved our stop up to break even. So it looks like unless this thing gaps down, terribly, we might just end up getting stopped out with our last part of position, but we made a small profit. In this bear market, this is really, all we can do. We took a small position just because we've had so many that have not been working, and we try to use what we call progressive exposure, where when things are not working, you trade smaller and smaller until eventually you might be trading just 10 shares of something. And when things are working, you're going to be gradually upping the game. But this kind of work and using exposure like this will keep you from getting into trouble. And of course, doing anything like revenge trading, huge size because you're trying to get money back. So it's a smart way to do things. But that's where we are with this. It looks pretty good. It's one of the few stocks that's broken down and hasn't failed. So this could end up being a real big winner. So we'd like to see if we can hold this, at least our tiny little bit left, for a bigger move. But I must say that in this, for over a year, there really have not been very big moves. I mean, if you got 20%, that was a really pretty exceptional move. 30 was pretty much like it. Now, looking back on charts, yes, you could say, oh, there's been some stocks that have gone up 100%, but not from any kind of viable low-risk position. Yes, of course, in this chart, I can say, yes, there's a 100% move, but you wouldn't be buying this new low, and there really wasn't a lot of places to buy the stock in a low risk. Here, there was a little area here, which in retrospect looks good, but we were going into earnings. And of course, we've had so many blowups. This may not have been one you would have held just because of the risk of earnings. Now, this one, of course, gapped up. Nice move, but it could have easily have gapped down. Okay, so, there are no stocks on our ready list, so let's go to the few stocks that are on the watch list. And the first one is Calix, C-A-L-X. Now, one thing I want to point out, that's a different stock. I won't point it out. So here we have, this is a computer networking stock. It's on our watch list. Now, this stock is in an industry group 5 out of 197. So that's actually really, really pretty good. It's showing that we're getting some money flowing to this sector that's coming up into the top 5 industry groups. So here you can see we had a big cup base formed here. It looks like a cup with handle, tried to break out, didn't make it. Again, you can see there were a lot of sellers just floating right around. Let's see if I can draw a line right here. Yeah. So you can see whenever we got about 62.50, that's where the sellers were looking. Could be that there were sellers that were coming, off of back here, when there was a big decline that came from earlier in the year. So those people were now looking to get out. Lost the line again. Sorry, let me see if I can draw one more time. One more time. The problem with this program, you draw a line, if it's not exact, you can't move it. So here we go. So anyways, around 62.50, whenever it would get above there, the sellers would be out in force, push it back down. But then we had a gap up on earnings, which kind of changed the game. We did have a sell-off, came back down, interesting, right to the 50-day, which was also the top of that previous area. So you see this a lot. What was resistance becomes support. And now we tried another breakout here, it fell. But we're getting, it's looking constructive, though we're just not setups. That's why we're watching it. We don't see the VCP pattern appearing yet, but it looks like we could be tightening up. So we're going to be watching it. Again, good fundamentals overall. So it's one to watch. And it's definitely one of a leader in this market. The next one is Quanta Services. Ticker is PWR. This one, again, this has been a choppy trader. You can see quite a few. Here's a breakout attempt out of this cup with faulty handle. And here's why I say faulty is, first of all, we had a cup that was a little bit too U-shaped. And then we had this handle that came down all the way almost to the lower third of the cup. This too wide of a handle, and then it kind of wedged up here. So this was not a really buyable cup with handle or pattern. But anyways, you can see they did try to break out. Doesn't mean they're going to fail, but this one did fail. Broke out, immediately reversed, came down, and just tried to break out again. A lot of chop, couldn't get above this. Then broke down and formed a new base with little handle. And then just seeing a lot of chop in this 5% buy zone. It breaks out, comes down, it's not ready. So, and now we've broken below the buy zone again, and looks like we've got support to 50 days. So we're watching this. It's definitely a leader. We see the annual earnings are increasing. We're jumping up to almost $7 in annual earnings. So earnings are strong overall. So it's just on the watch list, not ready to go, but definitely one of the leaders. The next one is Cerdo Tech. Again, another tech stock. Now this one, it's Internet Network Solutions industry group, but almost at the very bottom of the industry group. So a little bit of a red flag there, but we can see, actually there's not a lot of other competition there, but the ones that are, the relative strength is really poor, 28, 17, 13. So just not a lot of strength in the group. So the fact that this is an IPO and is holding up relatively strong could be that this is going to be a nice winner. In fact, this is hardly, here you can see it corrected only 15%, which is really pretty phenomenal for in this market to have only corrected that much when we're seeing, even stocks like Google and Microsoft and Apple have corrected more than that. So we're just watching this. Again, tried to form a cup with handle, did break out just a little bit above, couldn't hold, came back down. But this looks really promising. Earnings are strong. We've had some triple-digit earnings, triple-digit and very high double-digit sales. So this looks like a good winner. Definitely is on the watch list. Okay, we have two more in our long-term outperformer. The first one is XL Service Holdings. EXLS is the ticker. Now this has been on our watch list for a while, and it's actually moved between the ready list and the watch list, back on the ready list. Just, the market is poor. Here's the S&P coming down, and this has been reacting pretty well, but it looks like the market just kind of holding it down. and we've come back down now to the moving averages, which is where we wanted to buy it off of a bounce there, but we're getting the bounce, and then we're just not getting a lot of strength. The overall market now is in a uptrend under pressure, so we're just watching it. But buying about 172 to 176, that's when it's getting above this green 20-week moving average would be good. But we're just not getting the strength. And here, this is the monthly chart. Pretty nice uptrend. It's looking pretty good. But on the monthly, we're quite a ways off any supportive moving average. So, but the weekly's fine. You can a lot of times, you can see we get support at certain moving averages. Now, this one hasn't given a lot of support. It's broken through, but this bottom 40 week has proven to be support. So we're watching this one, but it's not quite set up. And the final one is Expo. That's Exponent. They're a technical consulting services company. Now we go to the monthly. Now this is a chart we like. We do like this just nice, continuously rising long-term chart. This is a 20-year chart. The RS, nice, just angling up about 2 o'clock, 2:30. The fact that the RS is 85, that's okay. And you can see it's coming down to its 40-month moving average. It's bounced off there a few times. And then the pink line is the 21. It got above, it got pulled back. This may just be, we're watching it. Maybe it'll come back down to the 40-month, and we would try to buy it there. But ideally, we're trying to get it on a bounce off that when the market is actually strong and back in an uptrend. And we're just not seeing that. And you can see here from the daily chart, it's formed a number of cups in a row. The one thing we don't like, we like to see, you'll sometimes see a cup or a base that forms on top of a base. And you'll see this sometimes here, like you'll see 1A and 1B, which means that you just didn't make any progress. But in this case, a little bit faulty because this one is lower than this cup. So that's not constructive and not healthy. Now this one is tightened up a bit. You can see this was a 28% depth on this cup. We had a little handle, breakout, a typical pump and dump. Off we went, sold off, couldn't hold it. This one's only 17%. So it's tightened up, and we got some tight trading here, which was really pretty good. We broke out again, the pump and dump, pop and drop, lasted 2 days, and down we went. So it's just not ready, and the market is probably holding it down too. Looking at the fundamentals, let's go to the weekly because we get the better view. You can just see first in the weekly, it's not a stock that's made a huge move in the last few years, but going back, very nice move over time when you look at it a longer time frame. But in the weekly, it's been a choppy trader, just not performing all that great. Could be too, earnings are just a little bit of deceleration on sales and earnings. So technically, fundamentally, not the best picture. But that's okay. It's ultimately the market's always looking ahead, and if you see this starting to take off, even with these kind of declining fundamentals, it may be that it's already looking ahead to what it sees as improved fundamentals in the future. But right now we're just not quite there yet for this one too. So we're just watching it. But it's a promising stock for a long-term outperformer. Well, that's it. That's it for this week. There's really just not a lot. We're kind of repeat ourselves week after week. There's just not a lot of things, but that's fine. We're just trying to get through the bear market with as few scratches or bites out of us as possible. And that's why we use the techniques that we do, especially with, trading smaller and smaller if we're not getting any results, and then bigger and bigger when we have. But, since, for the last couple of years really has not been that environment. So that's where we are. So that's it. We'll be back next week. See what it brings. Okay. Thank you.